Hi, I'm Mark Steber, Chief Tax Information Officer at Jackson Hewitt Tax Service. Getting a letter or notice from the IRS doesn't necessarily mean you owe the IRS money, but it can. Also, with the IRS sending out more than 200 million notices and letters each year, it's more common than you think. However, no matter the letter or notice, it's important that you take the time to understand why you received the notice and what next steps you need to take, or risk matters getting worse. Unfortunately, there are 70,000 pages of tax code, and that means it can be easy to make a mistake. And even if you get it all correct, sometimes the IRS or a state tax authority may have a misunderstanding and questions about your tax return. Today we'll discuss common tax mistakes and the types of issues they can cause. The first and most common mistake is leaving something off of your tax return that the IRS is expecting or looking for, like income items, say wages, side gig income, or other income items. But this can also include failing to file a tax return altogether, as some taxpayers simply fail to file. But it's most common for an income item being left off, missing tax data information, or even a schedule or form you need to include with your tax return. And when you're missing income records, like a 1099 or 1099-R, tax data, or other needed paperwork or forms, or information related to a deduction or credit, the IRS or state tax authority will have questions, and you'll need to answer those questions. Some of this happens automatically by computer, and much of the time pretty soon after tax season, but sometimes a year or even longer later. In response, the IRS will send you a letter, typically asking about a missing income item, or a deduction, or a credit, or the missing form. In summary, the most common mistake is that something is missing from a tax return that the IRS needs or expects. The next most common mistake is when something on your tax return mismatches something on the IRS computer system, meaning something does not match up, tie in, or equal the IRS data, and the IRS will notify you of the discrepancy. Perhaps numbers were input wrong on the tax return, a claim dependent has been claimed by someone else, or they filed on their own. Your tax deductions or credits might seem out of the ordinary, or your return doesn't match up with information on the IRS system. Accordingly, the IRS may send you a letter or a notice that they have a question, they need more information, or think a mistake was made. You must respond, or the IRS will generally assume you have no intention on responding, which will generally result in the worst possible outcome. The last most common mistake we see is when someone files a tax return and simply does something wrong. A misunderstanding of a tax rule, how a form or tax calculation works, or the information on the tax return is simply wrong, or the IRS thinks it's wrong, or they calculated their results differently. This can stem from claiming dependents or tax credits like the EITC to any number and type of tax deductions, including automobile or home office deductions or credits. But at the end of it all, the IRS thinks something is wrong on your tax return, or the forms filed, or they think a mistake was made. A simple did it wrong mistake is still very common, even in the digital age. A fourth, and probably the worst mistake for a taxpayer, is a mistake of omission. If you fail to claim a tax benefit, the IRS will not notify you of that mistake and on its own send you more money or a bigger refund. If you leave off or miss claiming a tax benefit, it generally stays that way forever. While these are the most common and biggest mistakes I generally see on tax returns, there are many, many more, with millions of letters and thousands of types of notices to learn about. Learn more on jacksonhewitt.com.